All right, so a lot of people want to know what the swing trading strategies are with a good stock selection. Like what stocks, ETFs do we use when it comes to swing trading with our strategy? All right, and what you're seeing right here on the screen is the equity curve of it's the combined equity curve of there's actually 10 stocks. There's a mix between stocks and ETFs mixed together, and this is the combined equity curve since 2015 through March 2024. Now, I'm going to show you right now, all right, on the screen is the list. Now, this is the 10. These are the 10 symbols right now that we're reusing on the strategy for swing trading. And this is a TradingView strategy. If you want to have access to it, there's a free 30-day trial, and you can actually see the details in the description below. Okay, so you're going to get full access on the 30-day trial, but you can actually see that in the YouTube description. So we have Apple, Amazon, AMD, ARC, Mara, NVIDIA, SOXL, SQ, that's Square, which is block now, Tesla, and TQQQ. So the ETFs in here are ARC, SOXL, and TQQQ. All right. I don't think I missed one, but okay. So what you will see here, the time frames are between 15 minutes and 1 hour. It's a good blend because with strategies and swing trading, not all stocks or ETFs actually will break out. And this is a breakout strategy. And this is the same strategy, but different settings, slightly different settings for each one, which you will have access to. It isn't like something that you have to go and reinvent. We're going to show you'll get access to the strategy. You will have access. We're going to show you the settings. You'll enter them in. But the point is, each of these stocks and ETFs will be breaking out at different points and actually drawing down at different points. So what we have is an equity curve that is more, it's more smooth. And now what here in the column, the green column, 2012. This is the backtest from TradingView. The 2012 backtest return. You can see from 1100%, 1600, 3500. Now Mara, that trades the it's a Bitcoin mining company at 26,000. Now we have it in there just because we are bullish on Bitcoin at least for the next year and a half. But again, we can move this in or out. But the point is, and it's just, anyway, it could be explosive, and if it is, we'll take advantage of it. NVIDIA 3,800. SOXL, we love SOXL. It's the three times leverage. It's a 3x of the semiconductor. That is so 28,000% since 2012. 71,000 for Tesla. What Square's 2,500, and one of my favorites is the TQQQ 8,800. The drawdowns. Look at the drawdowns. 15%, 18, 29, 17. Now Mara has a 71% drawdown. 21% for NVIDIA. But really they're between 20 and 20, maybe 20 to 30% drawdowns. And for these returns, these are drawdowns that are better than the S&P 500. I mean, this is that's why we use a strategy. But again, Mara, it's one of those crazy little stocks. No one has to have. You can have whatever you want. You can apply it to the strategy. But explosive stocks, ETFs work well with the strategy. Now let's go into the next screen here. I want to focus on the annual rate of return. Now, again, this is the blended equity curve. Okay, so what we've noticed is that you see that the drawdowns, these are the individual strategy drawdowns. This is the back test, and these are the individual drawdowns. Combined, since 2015, it's only 15% drawdowns when you combine them all together. So that's really good. So even with Mara having a 71% drawdown, all the 9 other stocks are, you're only trading 1/10, for example. If you have $100,000, you're only, every trade, for example, is $10,000, and you're not, what we see is a smooth equity line and a smooth drawdown. So 46% is the annual rate of return, just on the back test, again, not future guarantee or anything like that. It's just what we're seeing right now. Just what does that look like in numbers? Compounding calculator, we have a starting balance of 10,000, just as an example. 10% return, which is let's just say a market average over the last 100 years. It's backtest when that's 9.3 years ago. The ending balance would be $25,000, just a little over $25,000. Now, if we had a return of 46.52% over 9.3 years, it would be $697,000. Yeah, no, sorry, 697,000. Yeah, so huge, obviously massive returns compared to the average market, and we're keeping that that drawdown at 15%. See, big return. It's a digestible drawdown. I mean, because again, your drawdowns are going to be your emotions are going to look like this chart. When you come to this point and you draw down 15%, you're not going to feel very good. Then you're going to feel great. Then you're not going to feel great. Then you're going to feel great. Then you won't feel great, right? Because when you follow your equity curve or your performance on the balance, like the historical balance, you'll notice, gosh, that was a horrible year, a horrible quarter, or whatever it was, and it correlates with an equity curve. I mean, your emotions, my emotions, when we trade, this is what happens. So we want to keep our emotions as stable as possible. So drawdowns, max drawdowns are very, very key. Now let's go to the next slide here. And that's where I'm bringing up. Now this goes all the way back to the year 2000. I mean, the S&P 500 basically makes about 9% per year. Well, 9 to 11 depending on dividends and dividends. Okay, 50% drawdown here in 2003, 2009, 56% during the Great Recession. 2018, 20%, COVID, 35%. But look, and then 2022, really when all the tech stocks came down after COVID, this is in 2022, 26%. So these are drawdowns on the S&P 500 that only makes about 9 to 11% every year, and it has huge drawdowns, and our strategy is basically matching that with the drawdowns, right? Our strategy is matching the drawdowns, but much better returns. All right, let's look at TradingView. Right now, we see I have the 10 stocks up here in that swing trading, strategy stock selection. Okay, so I got these. Let's just start with TQQQ. We see up here is the net profit, but forget about this number here. We're looking at this percentage. It's hard to see here, but it's 5,200%. And then we see the max drawdown is 23%. Okay, this is with an account balance starting on the backtest at 100,000. So that's why you're seeing these numbers here that are big, like 5.2 million. The point is, let's look at this is a very smooth equity curve. I love it. It's 23%. If you were holding TQQQ, a buy and hold, you'd be having several 70%, 60% drawdowns during this period. NVIDIA, it's pretty crazy, 3,700%. Now, again, the buy and hold's been awesome, but anytime this thing tanks, this strategy is going to get us out. The whole strategy is biased long. We do not, meaning we only go long with the strategy. We don't short any of these. We don't have any swing trading shorting. You can if you want, but we only go long. And because when you're betting against the market, it usually for the swing trading just does not work out. Tesla. Now, what you can see in the blue here is the buy and hold. The green is the strategy. 44,000% with a max drawdown of 26%. Now, that's awesome. I mean, to have Tesla has 50%, 60%, 70% drawdowns a couple times since 2012, and that's what this back test goes back through. So very, very good. This is block. Here's the green. Now, yeah, the buy and hold is here in the blue, but look what happened to Square. It just tanked. Okay, it absolutely tanked, and the strategy actually overtook it, kept good returns. We have 2,800%. I believe for example, I believe in Block. I believe that will be a great company, and their sales will go up, and things will be good. Yeah. Now, so that's why I have it in here, and it does well in the strategy, and it's overtaking, for example, the buy and hold. Here's SOXL. This is the triple leveraged. It is the triple leveraged semiconductor. Okay, 21,000%, pretty amazing. 29% drawdowns, very, very, very good. And of course, the last couple of years is going crazy. And that's the more AI that we see, the more AI talk. Anything that semiconductor is going to be explosive, but we want to get out when we need to. And that's what the strategy is going to help us do. Amazon, 2,300% since 2012. Again, Amazon's a beast now. It's absolutely huge. So we've seen 18% drawdown, but a 2,300% return on the strategy. ARK, so ARK by Cathie Woods. This is an ETF. Now, a lot of people don't like Cathie Woods or they don't like her methods. I think that this fund will absolutely take off. And what's interesting, if you see the buy and hold right here, this was in 2000 and then about 2022, but anyway, it dropped off like 80%. But look, the strategy got us out, and that's what right here in green. It kept us out, and we're poised when the market returns, when we have explosiveness and breakouts again. This explosive ETF will do well. So we have 1,000% return, and then we have Apple. Okay, Apple, big and boring. 1,300%, 20% drawdowns since 2012. Pretty good. And we got it in there because it's a beast. And, okay, Mara. Now, this is more speculative. This is really the Bitcoin mining play. 13,000%. This thing could go crazy and go up. Or it could tank, but the point, it has a 69% drawdown that really occurred back in the 2014 to 2017 era, but this could do well. The buy and hold, if you were to buy and hold this stock, it would be basically it would be just a couple 100%. But anyway, we believe that this is going to be really, really take off. Okay, AMD, very, very cool. Now AMD is okay. We see the buy and hold here. It's explosive stock. It's done really, really well over the last 20 years. 3,400% with a max drawdown of 28%. Okay, 28%. Now, let's see here. You see the buy and hold here. This is a big drawdown. I think that's like 70%, 60, something like that. But we only have 28% drawdowns. And when we blend them all together, we get better equity curves. And those are those 10 stock selections showing you this. If you have any questions and you want to have access to the strategy, you want to test drive it for 30 days for free, be sure to look in the subscription for details on how to access it. Be sure to subscribe, comment, and like, and we're going to bring more videos like this to you. Thank you.